Since Rivian's IPO on November 10th, their market cap has increased from $65 billion all the way up to $97 billion. Now in this video, I'm hoping to show you what their production, their goals, and how their capacity will look like in the next several years, and use that to create what their revenue and net income will be in those years, as well as give you a forward P&E to give you a comparison of what their valuation looks like to future earnings. All right, so first off, let's talk about the facts of Rivian. Right now, their production, they've only been able to produce 44 trucks as of October 22nd of 2021. By the end of 2021, they're hoping to hit 1,000 deliveries. From a production perspective on the truck side, they're hoping to fulfill all 50K orders that they have by the end of 2023. So you can see that their production is going to be ramping up until the end of 2023. Doesn't know if that means 50,000 will be what they can produce a year. What they have said, though, is their manufacturing capacity at their current plants is at about 150,000 per year. And at their current locations, they could add an additional 50,000 in capacity if they had some additional spending to build out those plants further. Now, their orders on what they have currently is they have about 50,000 in truck pre-orders. Again, I said that they plan to fulfill those by the end of 2023. They have 100,000 delivery vans through 2025, and they estimate to deliver the first 10,000 by the end of this next year in 2022. Another highlight is they've already raised about $10 billion. They raised about $8 billion, actually I think a little bit more in the IPO. And their current valuation is about $97 billion. All right, so next up I want to go through some scenarios where we can value Rivian in a forward-looking manner for 2024 based off of their production capacity, their average selling price, and the net margin that they'll get on those vehicles. So this is assuming that they don't have a lot of extra CapEx and they really just go into the execution phase, but that's rarely the case. So we're making some assumptions here that they won't be spending a ton of capital and affecting the net income here substantially. But let's say everything stays equal and they just focus on production. So in scenario one, this is really half of what they plan to do for full year 2023, 25,000 trucks and 10,000 vans at an average selling price of 80,000 and 55,000, which is on the lower end of what is out there and advertised, and a margin of 15% on the sale of those vehicles. So that is also on the lower end when you compare to Tesla at 30, but Ford and like Toyota are at like 7% and 11 or 12%. So I wanted to do a little bit more conservative margin on this one since this is the conservative case. And so with that being said, we anticipate about $383 million in net income. Again, that's assuming no reinvestment back into the business. And then forward P&E of 24 at the $97 billion market cap. And this assumes they meet half their delivery goals for 2023. Moving on into scenario two, they would have 50,000 truck deliveries and 20,000 vans manufactured. Now their average selling price in this stays the exact same. The margin goes up closer to Tesla at 25, still lower than Tesla that sits around 30. The net income would be at $1.275 billion in that case, and would be indicate about a 76 times forward P&E at its current market cap of $97 billion. Now again, just remember, they wouldn't be able to produce that much until the end of 2023, and it'll take them a 2-year window to get up to that. So you have to be dang near perfect execution and no quality issues, and they have to be able to deliver as their goals state. So if they're able to hit their exact target, this is, I think, the more realistic scenario of all the four. Now in scenario three, this is getting more onto the bullish side of the argument here. And that's at 75,000 trucks and 30,000 vans. Now, on the van side, that's about 6.25% of the delivery van market, but I don't think it's out of the question considering the large order of vans that they have at 100,000 without any capacity or actually any manufacturing production currently. So I think it's conservative. I think it's still realistic, I should say, on the van side. On the average selling price, I adjusted both those up by about $5,000, which I think is reasonable, as well as we'll be looking forward into the future. So these vehicles will most likely be a little bit more expensive. So I think that makes sense. And then on the the margin side, I increased that up to more on the Tesla side as they increase their scale a little bit. Hopefully their margins increase a little bit. So I put net income at $2.245 billion, and that gives them a forward P&E of about 43, with the assumption that they have those production capacities, average selling price of the vehicles, and that net margin of 27%. Now moving on to the bullish case, they're able to produce and sell 100,000 trucks and 50,000 vans. I have this, I know the vans side is a little bit more crazy than the truck side, which is still very high. But the point here is that on the van side, I think as EV vans start to be more and more bought more and more, those orders will definitely pick up. It could be a very lucrative business for Rivian, as they do have a very large, like Amazon, who's gone out there and already made a large order for it. Others could follow. So I do think it's possible, but they would have to have near perfect delivery in order to get up to this number on the van side, and they would have to have really good adoption in order to meet the truck demand on this side as well. And I increased the average selling price up to $90,000 and $65,000. Now, I think these are honestly more realistic prices of what the average person will be buying these vehicles for, even in the conservative side. But I wanted to go ahead and bump those up because I think these are realistic numbers. Now, on the margin side, I went ahead and bumped that up to be equal to around where Tesla's at 30%. So that brings the net income at $3.67 billion. And a forward P&E of 26. So still a relatively high PE, but if you're considering the growth that they're having here, 26, if they're able to execute on this perfectly, 26 is not terrible. And if they reach these numbers, honestly, 26 would be really, really cheap. If they're able to continue and they meet these numbers, I think people would be willing to pay more than 26. Now, on the reverse side of that, if they're not able to and they fall down on expectations, 253 times earnings, that's in my opinion extremely expensive. I know Tesla is at near 1,000 or was at near 1,000 at one point. I don't think they're quite there yet, right? They need to prove some of their production capacity before you have any. I think that valuation is justified. Scenario 2, which I think is more of the realistic scenario, where you're looking at paying 676 times forward earnings. And so possibly, but again, you have to do your own research, figure out what you want. These are just another way for people to think through the valuation of Rivian compared to from a P&E perspective. Now, again, these are forward P&Es. They're not net income positive currently. This is just projecting in the future with some assumptions on what they could be worth in the future. Now, lastly, I just want to give you a comparison of Rivian versus some major car manufacturers. So the biggest and most compared name is Tesla right now. They're founded in 2003. They first had their profit in 2020, so not too long ago. And at that year, they had 500,000 cars being produced at the end of 2020. Their price to earnings at that time was 396. Their net income was 3.46, so this was actually a little bit less than the bullish case that I just presented, but significantly higher than what I said in the bear case, as well as the kind of scenario 2 and 3. On the market cap side, they were only worth $65 billion in December of 2019, and Rivian, with less than 1,000 cars in production by the end of 2021, is going to be worth more than them where they're currently sitting at. And in that same year where they had that market cap, they were delivering 376,000 vehicles. Now, just in comparison on what Rivian plans to do, they don't plan on delivering the 50,000 vehicles. Again, this is over 2.5 years, or well, basically 2 years now, is delivering 50,000 vehicles. plus possibly maybe 30,000, 40,000 vans. Okay. Now on the cars manufactured side and market cap comparison of Ford, GM, and Toyota, market cap for Ford is 77 billion, GM is 84, Toyota at 290. Cars manufactured, Ford is at 1.7, GM at 6.8, and Toyota at 8.8 million. Revenue comparison, Ford's at 127 billion, GM at 122, and Toyota at 275. So all these things are to show you kind of in comparison of where Rivian sits in terms of the numbers in comparison to where they're trading and against some of their, some of their closest competitors. I hope you found this information useful. Let me know down in the comments below what you think of Rivian as an investment. My name is Frank Finance, out.